We got some huge news for stock market investors as the central bank and the Federal Reserve in the United States indicated that they will be cutting interest rates. They did cut interest rates by a quarter basis points and indicated more interest rates are coming. They also gave greater detail about what to expect with inflation, unemployment, economic growth, and interest rates for next year and 2027. I'll talk about some of those details and what it could mean for stock market investors. So let's start with the FOMC, Federal Reserve Open Market Committee statement that they released after their meeting today on September 17th. So let's read together here these first two paragraphs. They said that recent indicators suggest that growth of economic activity moderated in the first half of the year. Job gains have slowed and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. So let me break this down a little more. In the first half of 2025, the big change was the new administration in the United States, right? President Donald Trump took office. And some of the biggest moves President Donald Trump initiated were to cut waste in the government spending, a lot of cost cutting in the government. And of course, that leads to job losses and declines in economic activity. But that wasn't the biggest thing. The biggest thing was the change in trade barriers or the increase in trade barriers, increasing tariffs meaningfully on everyone, every single United States trading partner. It experienced an increase in trade barrier. Now, those varied and those changed. And all of that also added to the uncertainty to businesses and individuals around the world, not just in the United States, but primarily in the United States. If you were a business owner, President Donald Trump introduced a lot of uncertainty. It wasn't just, okay, your costs are going up by 15% to import goods or 25% to import goods. There was a lot of uncertainty. First, your costs were going up by 15%, then they weren't. They were paused, and then they were going up by 50%, and then they weren't, and they were lowered, and they were paused. So it wasn't just an increase in cost, it was also an increase in uncertainty, which is a lot more difficult to handle than an increase in cost. Businesses that have been around know how to handle an increase in cost. It's not something that they haven't dealt with before. Click the link below to watch the full video.